Hey everyone, it's Doug the Retirement Guy back with the 2026 Weekly Dividend ETF Challenge review week number 1 of 52. That's right. 52 weeks of this, we're going to go through and show you which weekly dividends is actually working, which ones are not working, everything within our challenge. Have we made money? Have we lost money? Giving you all the insights and upsides of our challenge across the board. Let's get into today's video. So before we get started, we have to do the investment disclaimer and the risk warning that this video is not for financial advice. This channel is purely based on my own thoughts as I navigate my personal investment journey. Please always do your own research before investing in any single stock ETF. I am not a licensed financial advisor. If you need financial help, always contact a financial advisor, as I am not liable for any investment decisions that you have to make based on this information going forward. Let's get into the breakdown. So the 2026 Dividend ETF Challenge is the high risk, high reward experiment to beat the market with leverage ETFs. Now, to give you some, update and redo of what we have, our strategy outlay is we're putting $10,000 of our own money across 10 different ETFs for a total of investment of $1,000 in each. Our goal is the weekly dividends, and we're trying to get some growth in the stock across the board. So the hypothetical goal of the challenge is try to achieve a weekly income of 25%, a total return of 31%, and a growth fund of 6%. Now, we chose not to do drip, but because of what you guys all said, you wanted to see it, we do it a synthetic type blend with dripping allowed. It's not that we're dripping our money. What we're doing is we're doing a math calculation. I'll show you that here shortly. Now, the risk factors of this: leverage ETFs amplify both the gains and the losses, and it concentrates on the portfolio, increases volatility, and the option-based strategies. And the tracking approach is, like I told you, we were going to show you weekly dividend tracking, real-time performance monitoring, and give you basically the viewer feedback incorporated into it. Already you guys asked us for drip, we're doing drip. If you guys tell us something different, we're going to try to add it into it. And I have to say again that this is not financial advice. I'm investing my own money and showing you what I'm doing with that money as we go through this. So the brief update, we went through the 149 different weekly ETFs. We put it through our own little system of ones that we thought were going to have some growth, that we're going to have the yields across the board. We've looked at everybody from Round Hill to Yield Max to Defiance, Rec Shares, Granite Shares. And if you haven't seen it, but what we did, and I'll actually post the very first version of this in the comments so you guys can quickly see it and get caught up. But our final portfolio is that we did a broad across that we used Round Hill, Yield Max, Rec Shares, even Granite Shares across the board. We tried to do things equally. We did not try to duplicate, like, everything goes into AI or everything goes into tech or everything goes into Tesla. We tried to spread it out. And, honestly, it was a tough thing to do because I felt that we had more room to play with, that we didn't get the stuff like Amazon and some of the retail stuff. But what we got here, as you can see, we took $1,000 in each fund. We got number of shares, the price that we paid. And, some of the things that I was excited about, AMD was one of them. Google's another one. The gold side of things was another one. So we have a lot of pieces of the puzzle. Also, we put that TDAC and TSYX, put into that one, and just try to get that leverage of those two new funds. So let's take a look at how we did. So here's our fund selection that we have done. You can see how many shares we bought and the price we bought. So here's the payout. So far, across the board, we have our dividends that came in and the new current price. So we've collected a little over $83.77 in dividends, which our biggest dividend payer was TSYY. And we have the total fund value, which is an interesting part because the money who grow the most was AMDW, the Round Hill AMD chip supplier. That one's up $147.67. Now we have a few losers on the board and we have a few winners on the board. So we actually have 5 and 5. So we're really splitting right down the center of half of them winning, half of them not. So some people said this before, and I'll say it now, is that this is almost like Doug's fund of funds. I've picked the best funds across the board that I think will do the best job and put them in here. So we'll update this every week. So my $10,000 investment is now worth $10,117.30. We have $83.77 in dividends sitting on the sideline. So we have collected in 1 week a gain of over 2.01%. 0.84% from dividends and 1.17% in growth. So, a simple thing. I know it's not going to do anything right. It's not going to come up with anything proper, but if you take the 1.1 times it by 52, we could have a 52% growth. I don't expect that. That's a hypothetical answer and just a math side of it. If we do the simple math again at the total return, we'd be at basically 104. Again, I don't expect that. And we're going to be down to about that 40, probably about 60% on the dividend side of it. So again, I don't expect that, but what we're trying to do is achieve those goals. So first week, looks like we have a little bit of success. Now we take a look at the drip fund. So this is going to be an interesting one. I'm glad you guys asked for it, and I'm glad we're able to set this up. So what we've done is we've taken the total dollars of dividends and put it into it and said we're going to rebuy shares. And so we have a calculator that does this for us. We kind of set it up and into a system to do it. So the best one of all, we were able to buy 5 more shares of TSYY. Because of the price of being that $5 and us getting $26 of dividends collected, we're able to buy 5 more shares of that fund. Everything else is quarter shares. And, I don't know technically if the Fidelity would allow me to buy what they're doing because, 0.08 of a share, fractional shares. Be interesting to see if that happens. They may force us to do it on a monthly basis versus a weekly, but at least with our calculator, our computer, we can actually do this and calculate it out. So this one is not much changes. Basically, the difference is we have net value of $10,201.07. But I expect this one to grow with that drip because we're going to have more shares collecting more dividends down the road. Now, I'm going to add this one to it. What we're doing is we're watching, starting off with, is the assets under management. We want to see if the funds kind of give us a warning sign. As we've talked to you before about this, is that we're looking at the warning signs is a fund is going to go belly, if it's going to go down, if it's going to, how is it handling it? So across the board, out of the 10 funds, only 2 of them actually had assets under management to actually go down. Everything else, the assets are slowly climbing northwards, which is a positive answer. If you've watched any of my other videos, you always know assets under management is the biggest thing to watch in a fund to tell you the health of the fund. It's not going to tell you if the price is going to go up. It's not going to tell you if the price is going to go down. What it's going to tell you is that if each week the fund continues to grow its assets, you have a very, very healthy fund. Now, HOW. This one has taken a massive drop off. I call massive. It's almost a $37 million drop off. Okay, that's a little better than 10% drop off. So that one's I'm on the radar with HOW. Is what's going on here with that big drop off? Is this something that we need to take a clear look at? So we have a number that we've set down, and actually it's right around $200 million. At $200 million, we're going to have to make a decision of walking away from HOW. We'll watch it on a regular basis with you so we can keep everyone up to date and informed. We called this on ULTY When they had their big issues, we caught it weeks ahead of time. We got out of it in time. And now we're doing the same thing with these. The other one is the Tesla from Granite shares from 300 million down to 296. Now that's only a $4 million drop. And I know it sounds crazy saying only a $4 million drop, but we is not that 10% that we've seen from HOOW. I'm not as concerned with TSYY, but overall, I'm still going to pay attention to it. Total returns. And if you've ever watched my channel, you'll always know the same thing. Total returns means everything. This is what you have to watch for. And our gold, GDXY, the gold miners from Round Hill, up 15.79% for total return. Now we'll be comparing this week in, week out. So that's why we have the column there for the new total return. And we'll be seeing, is it going up, down, which way it's going. So gold miners gets a reward of 15.79. Chippy right there quietly at 10.37. And then our next biggest one is going to be AMDW at 9.41. And just to be nice, I can't say anything different because the number is big enough, but GOOW, the Google side, at 6.18. When we look at the dividend yield, I think this one's pretty much going to win week in, week out because Granite Shares does very heavy payouts of their funds, and that is TSYY at 2.61%, HOW at 1.17%, AMD at 1.38%. That's your dividend yield out, and we'll continue to update those week in, week out, showing you where it's at and how much dividend they've paid out, and we want to watch the total return as well. So right now we have some negative losses into it, and this is what's going to give you the interesting part of all the data that we get on this project. So recap, we're going to continue to give more and more awards. The first reward goes to the total winner, which is the gold miners at 15.79%. Our yield winner is Tesla at 2.61%. And our total value winner, which is AMDW at $147 of growth. So anyone says if you're chasing yield, which I highly don't recommend that to anybody, then TSYY is your winner. If you're looking for total returns, our gold miners weekly pay is doing exactly what we want at 15.79. And if you're just looking for total dollars growth of your fund, AMD wins it. So quickly is call for any feedback in the next steps. We've selected our ETFs, as we said. We're going to always ask this: there's one you think we should be swapping out? Should we something new that's on the horizon that you think was doing well? Should we add the YMAX, the YMAG into it? The drip strategy. We did this. You guys asked for it. We did it. And again, series interest, we're going to continue doing this across the board. I want to thank you for your input. I love what you have. Leave the comments below. I know this is a short, quick video, but let's see how we do next week, and we'll see you then.